So the first pair we are going to be looking at today is the US oil. And what do we have here? Well, we were able to hit our take profit target yesterday during the New York session. I think an hour or two after we closed the live session, we hit our take profit target at around the $86 level, which was our TP target since the beginning of the week. And that's about how many pips that is. Let's see, that's about over 570 pips thereabout, and we had multiple entries on this one, so definitely we had over 1,000 pips on the US oil. So for everyone in the house who took advantage of this move, kudos to you for taking advantage of that move. So right now, what are we going to be doing as we head into the New York session? Well, the first thing I would like to share with you here on the 1 hour time frame is the fact that we said something during the early days of this week that we want to see how price action is going to be relating with the key level at the $86 area. And what did we see during the New York session yesterday? We saw a very sharp rejection of that level as we saw a bullish engulfing candle taking price right out of the current bearish structure that we have here. So we already have a breakout of the bearish trend line, giving us a signal that price is moving to the upside. And remember, just our pattern here is that we don't get excited when we sight a signal like this. We wait for confirmations to happen in the form of a retest of a structure. So right now we have a consolidation phase going on right now, and we don't know how well this retracement move is going to go. But before I go into the details of how the retracement phase is moving right now, let us scale up to the higher time frame and let's see what is really going on from the higher perspective, and after which we'll come back here to make a decision on how we intend to trade the US oil for today. So let's log into the daily time frame and let's see what is happening. Well, this is the daily time frame right now, and the first thing we observed on the daily time frame, first of all, was that price has been on a very strong bullish momentum, and as a result of this, we were able to connect the series of lower highs here to give us that resultant bullish trend line. So we had a bullish trend line running, and this bullish trend line has been our yardstick in the last 2 years. However, if we zoom into the structure and the price movement in the last 6 months, we will see that price has been on a bearish trend, and this bearish trend has collapsed right back into the bullish trend line. So we can see price continue to find lower lows and lower highs, resulting into the identification of that bearish trend line. And as you can see, in the month of September, price tested the bullish trend line. We saw the second touch here in the later part of the month of September, though we saw bearish momentum around this area, which pushed price to break down that bullish trend line to give us probably a signal that we might be having a bearish momentum, but that did not happen as price broke right above the bullish trend line back to the upside to consider this breakdown as a false breakdown. So now, in addition to the current structure we have here, I was also able to identify the $86 level, which has been a major determinant of price action throughout this year. So we have this $86 level, and as you can see how this level has been a major determinant of price action. In fact, if we go back to as far as the later part of last year, we can see how this level at one point was a selling niche for participants in this market, and then we saw the breakout of the structure in the month of January. And after the month of January, price continued to go to the upside, and since then price came back into the structure in the month of August and in the month of September. So during the course of last week's trading session, we finally saw the breakout of that key level one more time to emphasize the strength of the buyers at this point in the market. So with the breakout of the $86 level, breakout of the bearish trend line, and also price going back above the bullish trend line, obviously this is more or less a bullish signal. And whenever we sight a breakout of a structure like this, what do we expect? We expect that price is likely going to come back and do a retest of the structure, after which we're going to be looking out for patterns on lower time frame to join the rally to the upside. However, since price tested the $93 level, that is late last week, We saw price come to as far as the $93 level, and since the beginning of the week, price has continued to find bearish momentum, hereby giving us a clue that this is likely going to be a retracement of that impulsive move. However, this retracement, we don't know how far this retracement is going to go. Is it going to respect that $86 level one more time to push price to the upside? That is the first question we want to be asking ourselves. Or is this retracement move going to come back and do a retest of the structure that was broken last week? Remember, we have the structure broken last week. So are we going to be seeing price come back to do a retest of that structure? So we don't know what that is going to be like, but since the beginning of the week, we took advantage of this bearish move. Hold on. We took advantage of this bearish move around this area, and we placed our take profit target somewhere around the $86 area, as we want to see how price action is going to be relating with the $86 level. Are we going to be having a situation where we will be having multiple rejection of this level to push price to the upside? Or are we going to be having a situation where a breakdown of the key level will be sending price to the downside? So this is what we don't know at the beginning of the week. So we decided to place our take profit target at the key level area. So let's scale down to the 1 hour time frame. Let's see what has happened, and then we'll make a decision based on the current structure we have on the 1 hour time frame. So scaling down to the 1 hour time frame, what did we observe here? So looking at the structure we have on the 1 hour time frame, we can see, remember, we still have this $86 level. The golden rectangular line is the key level. Let me bring it out a little bit so that we can see what I'm talking about here. So we have the $86 level around this area. So hold on a second. Okay, so we have the $86 level around this area, and what did we see? Since the beginning of the week, price has hold on. Okay, since the beginning of the week, price has continued to respect this bearish trend line. So I was able to identify this bearish trend line. So we had multiple entries right from the bearish trend line there, and as we can see, price has continued to respect that bearish trend line. But however, during the course of the trading session on Wednesday, we saw the first rejection of the $86 to give us a clue that this level might be serving as a bullish momentum. Then we saw the second rejection of that key level during the course of yesterday's trading session to emphasize the strength of the sellers at this point. Now, in addition to the structure we have identified here, that is the multiple rejection of the key level at the $86 area, what does this tell us? It tells us that the buyers are very, very strong at this point, but we wouldn't want to be jumping into such a conclusion that we should be buying right away from this area, as we want to be looking forward to further confirmations that will be supporting that bullish momentum. So in order to do that, the next thing we identified here was that we saw the significant breakout of that bearish trend line, and whenever we cite a breakout of a structure like this, what do we expect? Definitely we expect that price is likely going to come back and do a retest of the structure, after which we want to be looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. So with this technical standpoint in view, how do you think we will intend to trade this? Now we have two parameters that we're going to be using as our yardstick. Well, the first parameter is the $88 level. Remember, during the sometime in the middle of the week, this level was a buying niche for participants in this market. Remember, before we cited the breakdown of that structure, and then at another point in time it was rejected where it pushed price to the downside here. Remember, we took advantage of this move yesterday, which pushed price right back into the $86 level. It's in our take profit target. So right now we have a breakout of that structure, which also lines up with the bearish trend line. So definitely that is more or less a very good signal for us. So what we want to be doing is to look out for how far this retracement of this impulsive move is going to go. One, is it going to respect the $88 level? That is, are we going to start seeing multiple rejection of this level to give us a clue that the buyers are probably gathering around here to take advantage of a bullish momentum? Well, if we start seeing multiple rejection, then a breakout retest of structure will be giving us a confirmation to join the rally to the upside. However, if we have a breakdown of this $88 level, then probably price might likely come back to do a retest of the bearish trend line that was broken during the course of yesterday's trading session. So this is what I want to be looking forward to, and in order to make our job easier, the next thing I did here was to use this bullish impulsive move to the upside here as our yardstick to identify a buy zone. And you know what we are going to be doing? We are going to be bringing out our Fibonacci retracement tool, after which we'll be using that to identify the golden zone area, which is right within the 50 and the 78.6% of this impulse leg. And when we do that, what did we see here? We saw that we have our buy zone right within this area and the 78.6 area. So what this simply means is that we have somewhere around the $88 level, sorry, the $87.50 level and the $86.50 area as an area we want to be looking out for buying opportunity. So what this simply says is that if price continues to the downside in such a way that it breaks down the $88 level and price comes back into this buy zone area, which also lines up with the bearish trend line. If I extend that bearish trend line out a little bit, we can see that it lines up with that bearish trend line. So definitely we want to be looking out for reversal patterns on lower time frame to join the rally to the upside on this one. And if that happens, then definitely this is going to be the incitation of the second wave of the bullish momentum that started last week. Remember, we had this bullish momentum that started 2 weeks ago, right from the demand zone here into the upside, and that might likely be an area where we want to be looking for a trend continuation to the upside. However, the $86 level is still a significant level here, so we're still going to be looking for buying opportunity right above that area. Unless price breaks down that $86 level, then we will be thinking of buying at this area around this point. For today, we want to be looking at how far this retracement move is going to go. So we have identified a buy zone. So we have a buy zone here, and then we also have the $88 level to be our yardstick for today's trading session. So this is what we are going to be looking out for on the US oil for today. Let me do a quick recap. So what I'm saying here is that we already have an impulsive move to the upside. Price has been caught within a consolidation phase right under the $89.50 level. That is where price started on what day was that? That was on Wednesday, and then it appears we begin to see a consolidation phase that results into a retracement of that previous impulse leg here. So we want to see how price is going to relate with the $88 level. If we cite multiple rejection of this area, then on lower time frame, a breakout retest of structure will be giving us a confirmation to join the rally to the upside. However, if price breaks down the $88 level in such a way that we have a retest to structure, price comes back to do a retest of this bearish trend line, which also lines up with the buy zone we just identified here within the 50 and the 78.6% of the previous impulse leg, then definitely we want to be looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. And if price starts from this area, a breakout retest of the $88 level will be giving us an opportunity to add one more position to our existing trade here on the US oil. So this is how I intend to trade the US oil for today. If you have any question regarding what I have just explained so far, feel free to drop in your inquiries in the comment section, and let's come here. Let's see how I can be of help in that regard.